Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, April 19th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. Yet the US dollar index now down for the second week in a row, down minus 0.7%. Week over week as it continues to signal bearish on a 90-day trend duration. That's on the back of consensus now being short the Japanese yen as well as the Swiss franc. Moving along now to the euro versus the US dollar, that was up 0.7% last week as it continues to signal bullish on a 90-day trend duration. You have the Japanese yen versus the US dollar up 0.8% last week as it continues to signal bearish on a 90-day trend duration. And then you have the British pound versus the US dollar up another 0.9% last week as it continues to signal bullish on a 90-day trend duration as well. And so on the back of the down dollar, you did have commodities continue their inflation higher after some consolidation, posting a 3.5% gain to now plus 10.2% in the last 3 months alone. You have leading the charge WTI oil inflating 6.4% last week to now plus 20.9% in the last 3 months alone. That's on the back of oil volatility, OVX continuing to break down in kind, now down to about that 30 handle. Moving along now and touching on copper. That inflated 3.1% last week to now plus 15.6% in the last 3 months alone. And touching on the agricultural sector in corn, that continued its inflation higher as well, up 2.0% last week to now plus 7.3% in the last 3 months. And you take a look at something like lumber, unbelievable acceleration here in appreciation of 15.0% last week to now plus 113.8% in the last 3 months alone. Moving along now to rates, you take a look at the 10-year yield that corrected and or consolidated in hand by 8 basis points, having a counter trend week bounce in the week last week to now plus 50 basis points in the last 3 months. You take a look at the MOVE index, the volatility component of interest rates, that did not change. And then you had high yield spreads, those that were unchanged as well, again alluding more to a consolidation within its bearish bullish trend per the yield. On the back of that, you did have gold bounce 2.0% to lower cycle highs, and is still down 3.1% in the last 3 months and down nearly 17% since its cycle peak back in August. Just touching on domestic equities here, you take a look at the NASDAQ and NASDAQ volatility that has now moved to new cycle lows and closed at around 26 on Friday. And then you have the VIX coming in at 16, helping to have touched the spies at 8-time S&P highs already just here in April. And that's as we come into the meat of earnings season here and these easing comps, COVID comps. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.